My name's George Mavros. I'm an associate partner of business growth and exit strategists, and I specialise in sales, marketing and intellectual property. I'm going to be hosting part of the session today, along with Eric when I allow him to get back in on it. The two presenters that we've got today are Eric Chung, who's the CEO of Business Growth and Exit Specialists, and Rami Georges, who is the Director of Primary Loans. In addition to that, we've got some panellists with us today. Milind Kalkani, Digital Transformation Leader at Samartha Information Systems. We've got Jason Chung from Practice Manager and Licensed Conveyancer at MLC Lawyers. And we've got Renelle Wilson, who is a partner at CIB Accountants and Advisors. So we just have a bit of a chit chat at the moment, and at 9:35 we will start formally with the introduction and we'll go from there. So how about we open up the mics, and Jason, how's things in your neck of the woods?
Morning, George. Things are all good here. Things are opening up, very busy. So we're very happy to be having a little bit more freedom and getting to see those clients that have been keen to see us for the last 4 months face-to-face. I think everyone's missed a bit of that one-on-one, face-to-face communication. So it's good to be back.
Yeah, it certainly is. Certainly is. Renelle, what's happening in the world of accounting at the moment?
Oh, busy times for us, George. We also are coming back to the office and starting to have face-to-face meetings. And it's great to be getting back to normal, getting the staff back into the office and getting those connections again with the clients. It's good times. Feeling much better than lockdown, certainly.
Yeah, I've actually involved in a couple of different networking groups. It's interesting. When you want to go back to face-to-face, there's the question of the people that are vaccinated and not vaccinated. It's interesting the number of people that are vaccinated, but still would be quite happy to stay on Zoom. So I think we're going to have to encourage people to get back into the swing of get in the car, you can't just have the scungy pants on, you've got to actually be dressed up and go to work.
Absolutely.
Sort of reminds me when Mum used to force me to go to school each day. If we'd had Zoom back then, I would have attended school a lot more, I'm sure. So anyway, Milind, how's things in your neck of the woods?
Yeah, same thing, George. I'm zooming out of the Zoom nowadays, started meeting people. But the same thing, as you mentioned, I'm also like one of those person not trying to go too much with the crowd, taking it slowly one by one. But the IT business, as usual, it's quite good right now.
Fair enough. And Rami, how's things with you?
Excellent. Yeah, it's so good to have people out and about again, people back to normal life. Only thing I don't miss is being stuck in traffic. It's the part I hate the most. But it's good. It's good to have everyone kind of back together, back in person. Maybe once I see you, George, I can give you a nice big hug now. Couldn't do it before, But no, look, it's lovely to have everything back to normal. It's good that the country did cooperate the way it did. But from a brokering point of view, probably not as crazy as Renelle's industry. I know accountants probably were the busiest, but it was been such a crazy few months for us. So, but very, very happy to be speaking to people and be able to help them where need be. So, yeah.
And our illustrious leader, Eric, how's things with you?
I think it's fantastic. Businesses are either already open up, getting ready to open. Certainly, they are facing various challenges that we can help them with. So it's been very productive last few weeks, and we feel good about it because we can help them to reposition themselves and getting ready either to reopen or already open. Certainly, there will be quite a bit of changes to be considered that I will share during my presentation. So it's all good, George.
Very good. Well, in the wonderful land of technology, we've got a few people that for one reason or another, have not been able to quite connect in. I noticed that Pina has joined us, so I welcome you, Pina. For those who are seeing this recording after the event, we won't be editing out anything, so you'll get the full edition of what we went through, and we'll go from there. So what I'd like to do now is I would like to introduce you to Eric Chung, who will be our first presenter. So Eric started his career in Australia back in 81 with Deloitte Haskins and Sells. He's had a long and successful career in various senior roles. He's got some pretty big names on that resume. He's had senior roles with people like Avis, Jaguar Rover, Audi and Hyundai, to name but a few. And he went on to be a general manager of a $1.4 billion company back when $1 billion was seriously $1 billion. From there, leveraging his holistic and multidisciplinary approach to things, he started to go into management consultancy. He successfully developed and implemented holistic and pragmatic business growth and exit methodologies. He's focused on strategic financial roadmaps and business key drivers. And he's produced many, many great results for his clients, including companies in the BRW Fast Starter list. He's won various awards, and just recently he's been recognised as one of the top 10 Australian business strategists and experts to watch in 2021 by the Australian Business Journal. Not only do I know him from a business perspective, but Eric's and my relationship as friends goes back over 15 years. I have personally benefited from his approach to business advice, and I've seen him help many people over the years. So without further ado, I am going to pass over to Eric, and hopefully he's got his presentation sorted out. Eric, over to you.
All right, thank you, George. I think I just tried to get the presentation up and running in the right order. I think you can see it properly, I hope, at the moment, or is it still, okay, great. Yeah, thanks for the great introduction, and good to see all of you here this morning, and welcome. And this morning, I would like to share with all of you three things. The first one is why a reopening strategy and financial modeling are critical to your business sustainability and growth. And secondly, this is quite important, how to pragmatically formulate your reopening strategy and financial modeling for sustainability and growth, which is the how part. And last but not least, what I would like to share with you is basically to make sure that we have a key take-up for you. So why a reopening strategy and financial modeling are critical to your business sustainability and growth? Well, interestingly, Bank of Queensland recently released an article mentioning the top 2 key reasons for business failures. One of them is actually not having a strategy or plan. So the way I would like us to relate to it is that, look, a lot of large businesses, without any exception, they would have a strategist, normally the CEO or chief strategist officer, employed to come up with the big picture game plan, which is corporate strategy. And then with that is including vision, mission, culture, etc. And then with that, next level strategy, which is quite holistic, encompassing all areas of business, including obviously understanding who's your target client and your value proposition, talking about, how do you market them and sell them, and, your operation, obviously your financial, your human resource requirement, your operation and customer service. So that is basically a clear direction for the company to move forward to achieve the desired outcome. Just bear in mind, in the big corporation where I came from as a general manager of 1.4 billion company, if you make a mistake, it's not talking about hundred or thousand, you're talking about million and million of dollars. So that is actually a formal process. I guess the challenge with small, medium-sized businesses, most of the business owners or managers are so involved in the business earning part, get the business going, servicing the customers and, getting money in the bank. They actually don't have that much time and expertise to focus on strategy that give them a roadmap and clear direction and business model to be successful. So that is the reason. Now, it's actually much more pertinent now why we need to have it, which I will actually go through in the next slide. Now, the second common reason, basically, businesses don't have the right funding they need to sustain the business or grow. I think quite often we would have heard, cash is king. It actually is. You think about it. Some businesses actually making money and they fail or go bankrupt because insufficient cash flow. If you have employees, you don't pay them when they fall due, I think you'll find out very quickly they don't work for you. And if you have suppliers with certain trading term and you defaulted a couple of times, once again, you'll find out very quickly they'll stop supply. So what it means is your business will not be able to function without people, no supply, and you'll be forced to either close down or basically, forced to be bankrupt. So that's why having a strategy and also, financial modeling is very, very important. That's good. We understand it's important. But then the next question is, as a small to medium-sized businesses, we don't have that much resources. How can we actually come up with the pragmatic way to formulate the reopening and growth strategy, as well as the financial modeling for sustainability and growth? So what I'd like to share you, first of all, is the formulation of growth strategy, which is quite topical and pertinent now. Don't forget, we just came out from, the lockdown and COVID situation. There's a lot of things actually have changed. So what we need to understand and analyze are those changes. One area definitely we got to rethink and consider is the demand for our product or service. Case in point, if you are hairdressers, you'll most probably jumping with joy or get stressed out because of the pent-up demand, and that is certainly an opportunity, but in itself a challenge, right? So customer buying behavior. Once again, if you take a hairdresser as an example, we often see from the news some well-known hairdresser has been booked out until Christmas. So some of the customers are saying, wow, okay, maybe now I should pre-book, my, regular visit. And as a result, their buying behavior is changing rather than, 1 week before give you a ring, they might book for several visits. And some of the salon actually quite welcome walk-in visitors, but might not work now because quite often if you turn up, they'll say, sorry, it's totally booked out. So you have noticed that customer actually changing their buying behavior in that situation. Customer expectation is already quite important, especially, with the COVID and with the lockdown. One thing is quite obvious, you know it very well, your customer will expect that you and your team would have double, vaccination, and you would have a way to make sure that your customer who come to your premises, once again, have double vaccination. So the customer expectations certainly change, especially in the example. Then what you got to work out with all these changes, it's not business as usual anymore. It's not, the old ways of doing business. What resources would you need to reopen or continue your business? For example, cash. Do you have enough cash at bank to reopen? You know, reopening, there are few additional consideration you need to take into account. Just like, you know, you kickstart your business, you might need to spend more money doing cleaning. You might need to spend more money to replenish your supply because some of them could be outdated, for example, right? And people, have you got enough people? One of the challenges now is some of them might not want to come back to work for you. And with a pent-up demand, you might need more people. So those are the things you've got to consider. The same with the supply. We often quite astonished that people don't think about it in advance, because, you know, if you supply from overseas, right, or got the expiry date, it's actually quite challenging to get them in right now because every one of them want them right now. So once again, you got to think ahead, you know, contact your suppliers, especially the one that you regularly buy from, make sure that you secure your supply chains there. What about process? Things can change. One thing quite obvious, if you go to shopping centers now, you know, what you notice is actually most of them got queues. You know, you have to change the process now. People actually need to do self-distancing and they have to queue up to go into the store because there is a capacity, how many can be in store at that time. So what would it mean? You might have to change your process in terms of getting your customer in. You might need to have one person, you know, out there basically checking, you know, make sure customer is checking in and they are double vaccinated. So operation as well, like there are a lot of, you know, I guess issues there, but a lot of opportunities. You know, if there's a pent-up demand, will you be able to extend, you know, your operation hours, you know, to be able to capture more customers go into the store, because obviously not business as usual, they are restricted in terms of the numbers. And management, like what resources do you have to actually manage all this? If you don't have, then you got to think about it, how are you going to make it work? So I guess once you understand the changes, understand the resources you would require, the next thing is that, all right, what are the issues to be resolved? And very importantly, who is responsible for it and by when? Okay. There are several areas you need to consider. Obviously, cash. Will you have a cash flow issue? If you have, who's responsible to resolve it and by when? We always say if you have a strategy and financial modeling, you can anticipate and you can, you know, find the solution now, not when it happens and you're struggling. The same thing with the people, all right? Is it under control? Do you need to recruit more people? All right, if that's the case, who's going to do it? And by when you need to get them ready? Supply. Supply, I think with the lockdown, certainly is one of the business issue you definitely need to consider. Doesn't matter what it is. There is always an imbalance between supply and demand because of the logistics. We can say as well that a lot of them try to do everything from overseas, but obviously then the freight cost will go through the roof. Processes, we have mentioned that if we are going to change your process, right, who's going to be responsible to make sure that it's work, and you've got to train the staff, you've got to communicate with the staff, this is the new process, that's the way we do business now. And then obviously any related operation issues that got to be resolved. And management, how are you going to manage all the different challenges you have, and how are you going to make it work? And I guess the last part here is most probably quite critical. Most of the businesses, I'll be surprised if they don't have any gap. In other words, they've gone through all these processes. Somebody said, gosh, we need help, right? If you know you need help because you haven't got enough resources or solution there, you need to basically get on with it, get it done now. Cash. How are you going to resolve it? What help do you need? Do you need to talk to your banker? Do you need to talk to your broker? Do you need to talk to friends and family members to get some cash? And the same with the people, right? Do you need to get people to recruit more people, right? Do you need to secure supply chain? And do you need to find substitute to make it work for you? Processes, right? What need to be done to fulfill customer expectation and their buying process? For example, some businesses actually expanded their online into click and collect, because what they are saying is they will not have enough capacity for people to come in. If they are happy to browse online or even on the phone and place an order, they actually can do the click and collect. That will basically free up the capacity issue. And then management. The way I see it is that a lot of businesses will be struggling to come up with a new business model strategy and business modeling. Once again, if you need help, now is the time to get help. More than happy for you guys to talk to us or talk to one of our panelists, and that is certainly need to be done as soon as practicable. Now, this is show me the money part. We always say, okay, you want to reopen your business or you want to grow your business, but you got to be practical from the money side. For example, is your business going to be profitable? Right? If not, is it worthwhile to reopen? So through our experience, this is the way to do it. Okay, you got to do a projection for your expected revenue by week. Right? Obviously, it's not easy, but once again, you need to make an educated guess. If you need help for the people do it day in, day out, do so. And of course, you got to project your direct cost, your labor and your material, and then your fixed costs like your rent, etc. And then your projected profit and loss. So if you've done this projection, first 3 months making a loss, you say, well, I can pay with that. Over 12 months, we are going to be in the black. All right. Your challenge will be cash flow, which we'll discuss in the next slide. But if your projection, the next 12 months, you're going to make a loss. You got two choices. One saying, wild border. My hobby is fishing, gone fishing instead. Beautiful, right? No stress, okay? The other alternative is you get, a strategist, business advisor to help you to fine-tune your business model to make it work. That is one of the things that we help our client, all the time. If you tweak it here and there, and after a few iterations, it should work. Because there are so many different solutions that they can work with you to resolve the issues. Okay. Now, if your profitability makes sense, in other words, we would want to go back. The next challenge is that have you got enough cash and cash flow to make it work? All right. Remember, I mentioned cash is king. Now, even though you are going to be profitable, if you don't plan this properly, it's going to kill you. In other words, if you open your business and then second week you cannot pay your wages, third week as well, most probably you don't have anybody working for you because the demand is very, very strong out there for people. And most of the people, they got expenses and mortgage obligation. They actually need cash in their bank account on a regular basis as they fall due, right? So the first 3 months is important to do it on a weekly basis. The reason is if you do it on monthly basis, even though your cash flow or cash at bank could be positive at the end of the month, but during the weeks, you might have problems. You might have problem in week 2 and week 3. After week 4, a lot of money coming in, then you can resolve it. But I can guarantee you, your employee will not be too happy to say, well, okay, not a problem. You got problem this week, don't pay me. You got problem again next week, don't pay me. I just go out there and try to find out with again, eat anything with my relative for free for 2 weeks. All right, that will not work. So the rest obviously got to be, for a longer period. Now, what would happen is once you establish the projected revenue and expenses, you actually use that as one of the input in your cash flow. And then of course, there are other cash inflow and outflow not represented in your profit and loss. So if you have a look at that, obviously you need to have a clear understanding opening balance in your bank account. That is fact. Not, oh, I think I'm going to have, you know, $50,000. You actually go to your bank account to see how much have you got, right? And then of course you got to take into account the money that will coming in, so your debtors, people owe you money, and the money that you already committed to pay for, you know, supply and everything else. But then obviously you analyze your weekly receipt, you analyze your weekly expenses, you put them in there. Guess what? If you have loans, a lot of businesses have loans, whether it's credit card or actually bank overdraft, bank facility. Of course, you got to take that into account. Otherwise, your bank will not be very happy unless you negotiate deferment and then best payment. All right. You got to manage that, especially if you already have an arrangement ATO, you actually need to pay them on time. They are not going to be happy to keep rearranging. And then other ATO payment. Of course, if you expect any government assistance, which some of the businesses will be entitled to in New South Wales until the end of November, provided certain conditions will apply, you also can take them into account. Now, if you have a look at this, right? If you have a template and formula, it actually can be done consistently and easily by somebody in your organization, but this got to be updated by the actual on the weekly basis, because doesn't matter how you plan, the reality is the actual never match with your plan. Always some differences there. So with your cash flow projection, especially, right, you need to make sure you update it with actual, because that will affect, you know, your future receipt and expenses, and also your closing bank balance, which would be an opening bank balance for the next week. So the whole idea with this is you come up with the first version, you update it with actual, and it's going to be dynamic. If you understand the bits and pieces driving this, you actually can anticipate and try to come up with the solution upfront, right? That is so critical for us to do that. All right, so let me share with you some key takeouts, and this basically food for thought for you in the situation that is highly relevant to you. I suggest you actually take it seriously and take some action even after this webinar. Okay. The first one is a well thought of reopening and growth strategy and financial modeling for profitability and sustainability, as what I have shared with you, is very important, because that is show me the money part. Unless it's worthwhile for you, seriously, why do you want to continue your business? It's going to be additional burden for you. You get burnout, you get stressed out, you get abused, and you'll be totally disappointed. Okay. Now, this is the key point. Once you've done all that, make sure that you are not throwing good money, whether it's your own money, you know, borrowing from your relative and friend for, you know, other finance sources. You should not throw good money into bad situation. Because quite often we see that during emergency, you know, brothers, sisters, uncle, auntie help out. And then in a few months, they say, gosh, you know, the business is not doing well, it's not working, and I cannot pay you back. And they actually create, you know, unnecessary drama in the inner circle of your daily life. And I would say definitely not to do it unless you're clear that your business will work when you reopen and can grow accordingly. And guess what? I think this is most probably obvious wisdom. You need to start looking for any appropriate funding right now if you require, right? that's why the next presenter, Rami, will go through some of this option and all that, which is quite important and quite interesting. And very importantly, if you need help, get started now. It's no point to reopen and continue your business running blind. And I guess most probably just like example, you want to go from Sydney to Brisbane, unless you've got a clear roadmap, you know, how to get there, for example, the fastest way and the safest way, you just say, well, jump into the car and drive to the north. Eventually, somehow you should get to Brisbane. Before you know it, if you go through the back way, not following road sign, you might get lost and not going to be able to get to where you want it to be. So yeah, thank you for your time, and glad to be able to share with you. If you've got any further question, you have the opportunity during Q&A. And George, back to you, please.
Thanks very much for that, Eric. Some good things to think about, as always, when you're talking. There's always stuff that creates thought-provoking ideas. I guess one of the things for me on that was about the road ahead for some will be a lot harder than others. What we talk about within this group of people, and we work collaboratively as a group of professionals, we always talk about strategy, we talk about purpose, and we talk about the motivation. So quite often the difference between courage and stupidity in staying in business is found out at the end of the journey. If it worked, you had the courage. If it didn't work, everyone tells you you're being silly. The bottom line is you've got to understand what your purpose is and what your motivation is. And if you want it to work, there's no calendar that actually has some day on it. So especially now, taking from what Eric's saying, you've got to set yourself some targets, you've got to set yourself some dates, and then you've got a chance to achieve goals. So our next presenter is a fellow by the name of Rami Georges, and while I'm giving an intro, I'll hopefully see the technology wizards move from Eric over to Rami so Rami can get ready for his presentation. I met Rami a little while back, and he is a director of prime loans. The very first time I met Rami, I happened to be sitting in a meeting where he did a presentation, and I walked up to him at the end of that meeting and I said, "You and I are going to do business." He thought that was a bit interesting, having never met me before. But what I heard from Rami was the value that he could bring to people from a strategic financing perspective. He's a member of the Mortgage Finance Association of Australia, which is one of the peak national bodies in Australia. What sets him apart, in my opinion, is his rather unique background. So he actually started off as a graduate in business and commerce, and he did a double major, one in marketing and HR. He then spent about 5 years at Telstra, and he was managing the retail sector and managed to achieve the top in the region Net Promoter Score. So in other words, satisfying all the customers' needs in the retail sector. From there, he moved over to advertising solution specialist for NRL, Sky News and Lifetime. Prime Loans started off in 2018, and he was leveraging and continues to leverage his problem solving and people skills in the finance sector. The thing I like most about Rami is that he has a holistic approach. He can provide all sorts of finances for all sorts of needs for all sorts of people. And why that is important is because this group in particular is all about strategy. Strategy does not work unless you cover all the bases. And when it comes to finance, I've come across many a person that's ended up setting something up in one area of their financial needs for that only to come back and bite them when they're doing something else. He's got in excess of 35 lenders on his panels, and he can provide tailored solutions. So without further ado, it gives me great pleasure to introduce Rami Georges. Over to you, Rami. You're on mute. That's a schoolboy error.
There you go. I've done it again. George is teaching me about technology. What do you know? But George, lovely. Thank you so much for the introduction. I really appreciate that. And obviously at the back of what Eric spoke about, I think it's quite relevant that we do speak about the finance sort of thing. So as George mentioned, guys, my name is Rami Georges. I am Director and Finance Broker over at Prime Loans. Bit of an overview about today, guys. I'll be going through some types of finance, some traps to avoid in the finance sector, interrelations between each type of finance, and a one-stop shop holistic finance view. Now, just a quick picture here, just showing you the type of finance that a finance broker or one-stop shop finance broker can provide you with. Obviously, your everyday leisure goods like motorbikes, jet skis, boats, cars, to caravans, to obviously some work materials like forklifts and construction goods. But also, if you look down the middle, shop fronts, factories, and of course, your property. Some of the stuff that we'll be covering today. So before we get too far into it, guys, just a little background about Prime Loans. So we are a financial brokering company catering to all financial needs, whether it be personal or business. We are mobile lenders, which means we do come to the client if that is what they want, whether it be their workplace or home. We have been around since 2018, as George mentioned, and have an excess of 35 lenders for our finance solutions and another 25 finance lenders for our asset finance and commercial finance solutions. Now, there are many people you could go to and there are many organizations you can go to provide finance. What we're talking about today is holistic finance strategy. So what we're talking about today is a holistic financial strategy approach. So when you stop to think about it, we all have different roles in life, but we're the same person. There's you, the individual, there's you, a part of your family, and there's you as a part of your business. And in any one of those capacities, you may be looking for asset finance, or personal loans, or commercial loans, or home loans. Our holistic financial strategy approach has you in the middle, and we never consider one of your financial needs at the moment without thinking about the impact and what impact that could have on your financial needs in the future. So we give you a holistic solution, not just the solving of a problem today. Now, what are the points of difference that you should be looking at when you're looking at strategic finance solution? Well, number one, the person that is working with you, your broker, needs to be responsive. They need to be somebody that is going to answer your call whenever it's needed. And the only time they shouldn't answer your call is when they're in a meeting, obviously giving that same respect back as you would like to receive you in the meeting. Now, mobile brokers are very good as they are happy to go where is needed at different parts of the day, whether it's down to your office, to your house, or even to your local coffee shop for a nice cup of coffee. They need to have access to a full suite of financiers. So it's not good enough to just have the banks, but right through, but right through to second and third tier lenders. So they should be able to finance assets ranging from brand new, old trailers, right through to 20-year-old vehicles and prime movers. And not only new cars, but you're looking for someone that can finance second-hand vehicles. You should also think of, can they help me in the business and in my private life? That's what a total solution is all about. They need to be somebody that has preferential rates from the lenders. And we happen to have preferential rates with a number of our suppliers providers. And what does that mean to you? It gives you access to the lowest rates in the market, whether it's in your private life or in your business life. So guys, a quick finance overview of what I guess at the back of what Eric was speaking about. It is critical to have a clear business and financial roadmap, strategies to kickstart your business post-lockdown. And once you have clarity of good money, it would be wise to start looking for appropriate funding if need be, to reopen and continue your business operations. Types of finance available at your fingertips, which I'll be taking you guys through, touching a bit on government guarantee schemes, and of course, a holistic view on your finances. Now, there are many ways to finance your business, all having upsides and downsides to them, and there are numerous ways that you can secure those loans or financing options. Now, guys, something to consider is government guarantee loans. Now, due to the complexity of the government guarantee loans and the fact that the government is still getting their head around it, it is very hard to give general educational advice at this stage other than the following schemes. The government guarantee SME scheme, phase 2, and the SME recovery loan scheme, and of course, first home buyers 5% deposit scheme, which I'll be taking you guys through briefly. Now, the government SME guarantee scheme, this provides SMEs, including sole traders and not-for-profit organizations, of course, with vital additional funding to help them get through the impact of coronavirus, recover and invest for the future. Now, under this scheme, the government provided the 50% guarantee to participate lenders to enhance their ability to extend credit to SMEs. Now, the government SME recovery loan is designed to support economic recovery and provide continued assistance with SMEs dealing with the economic impact of the coronavirus crisis. Now, guys, this is just some research regarding government guarantee loans. Glad to discuss with you guys further off the records, as there is much more personal and case-by-case circumstances regarding this. To be able to discuss these at length, we would need to speak with Renelle, our group's preferred accountant, and part of the panel at the end of this presentation, or of course, if you guys have someone that you know that is capable of this sort of advice, your accountant. To review specific circumstances, as I mentioned earlier, guys, it is case by case. Everyone has their own personal circumstances. And of course, there are other external items like relying on the bank to play their part also. Now, guys, the first home loan deposit scheme. Now, you may be thinking, why are we talking about home loans? I will be diving into this a bit more as a part of the overall financial picture. So guys, the federal government has launched an initiative, and this is assisting first home buyers to enter the market with as little as a 5% deposit, incurring no mortgage insurance costs. Now, this was brought in obviously to encourage young people to get into the market and start to get a feel of things, and they're willing to obviously guarantee the remaining 15%, obviously taking away any LMI costs. Now, guys, our borrowers come in all shapes and sizes, so including business operators especially. So we know from experience that one size doesn't fit all. Being experts in all aspects of business and home loans, residential investment property, finance, refinancing and debt consolidation, even catering to borrowers mainstream lenders may not service. Now, home loans can be utilized for whatever reason you may have to purchase a property, whether you're refinancing, purchasing on and off the plan, consolidating debt, constructing a property, or purchasing for development. Having a finance broker with a diverse panel of lenders is critical, as each lender have their own niche to cater to each person's financial situation and specific needs, catering to all types of customers, from first home buyers, people looking to build their investment portfolio, releasing equity for renovation, and of course for guarantor loans. Now, when it comes to servicing a loan and evidencing your income, self-employed works differently. Now, what the lenders will look at, obviously your full-time PAYG, you provide 2 payslips, a PAYG summary, and you're good to go. With self-employed, on average, lenders will ask for 2 years most recent company financials. They'll look at your profits, add back interest and depreciation. They'll take an average of the 2 years in servicing. Now, we know some companies that opened their business 2.5 years ago. You know, it took the first 1.5 years to kind of get the business started. You know, expenditure would have been high to set the whole company up. And then in their second year is where they really start to, you know, see some real profit. The beauty of one of my lenders, ANZ, they've got a niche, and they will look at your most recent 1 year financials. So it's always a good option to have for those startup companies that obviously didn't hit the ground running straight away in the first year. Specialist lenders that will look at self-employed clients that have been operating for 6 months minimum, 1 day GST registered without conducting credit checks. And of course, in regards to specialist lenders, they do also do unlimited debt consolidation, including ATO debt and loans from private lenders. And of course, low doc options for those self-employed clients that cannot provide financials. So guys, personal loans. So obviously personal loans, you know, the list goes on and on. I've listed a few on the screen for you guys to see. There are so many reasons as why you would need to obtain a personal loan, whether it's to consolidate debt, renovate your home, finance a wedding, you know, if you want to start a business venture, medical expenditure, car purchase, holiday, gap finance to put it down towards a deposit for a property, or funeral costs. So guys, a bit of a quick scenario as to how I help the client out, well, how we help clients out all the time with personal loans. This is a one-off kind of client that stood out to me. And this is standard when it comes to the personal loan space. So client had multiple debt. They wanted to consolidate. They had a CBA commercial loan at 16.95, you know, paying $785 a month. CBA credit card, 5K owing with an 8K limit. Westpac credit card, 4K owing with a 5K limit. A Latitude personal loan, 14.95%, paying $410. The total debt owing was $48,000 with monthly payments of $1,845. So once the debt was consolidated, new repayments were reduced to $1,240 with an additional $2K for home furnishings. So, you know, whether you have commercial debt, credit cards, personal loans, it can all be looked at moving under the one competitive rate. And for these guys here, 4 debts consolidated under one, 2K additional cash for them to spend and cash out. They had a monthly total savings of $605, and the customer can now pay off the loan with a specific lender at any time they want, incurring no penalties at all for early exit. Now, when it comes to asset finance, it is a type of lending that gives you access to business assets such as equipment, machinery, and vehicles. So why asset finance broker? Well, now again, if you go to a traditional broker and you are looking to get asset finance, you may very well just go through a broker who specializes in asset finance. And the reason you go through a broker, whilst whenever you go for finance from one organization, you're going to get one organization's idea of what is best for you. A broker will look at the best from a multitude of lenders, solutions. Now, as you know, our strategy is all about holistic. So that broker should be able to provide you with your other finances also, obviously having a one-stop shop view and a holistic view on all your finances and the repercussions of one to the other. So some of the stuff we could be talking about, you know, is consumer loans, chattel mortgages, commercial hire purchases, and novated leases. Now, some of the things you might find interesting and some of the scenarios that I can help you with, a lot of people struggle to assist their clients with, we can assist those, for example, with one-day ABNs for new business owners looking at purchasing new trucks or cars for their business, low doc finance options. Now, low doc is not new. I'm not saying I came up with the low doc option, but you often find in some cases is some people know how to do low doc loans, but don't know how to do the full doc loan. Or they're specializing in the more exotic non-conforming lenders and don't know how to do the more traditional loans. Part of the reason why George and I actually connected, George Mavros, the gentleman that is introducing us and running this meeting, he had somebody that was great at getting finance for brand new vehicles. But George had to literally jump in to save the deal on his used car loan that he referred over. Because the guy didn't understand how to do a used car loan, that's where he kind of had to get involved and jump. And that's the beauty of finding a holistic broker that can do all. So another thing we do is, you know, subprime movers for clients with defaults that do deserve a second chance, tradie startup finance, and older age assets with no financials. So these are some of the more unusual ones that a lot of people say, but you can't get a loan for that. And guys, I'd like to make an offer to you guys all. And I'll make you an offer. If another broker or financier says to you, you can't borrow money for that, for the cost of a phone call, I may be able to tell you that you can. Is that worth the call? I'll leave that to you. Guys, so obviously ways of providing servicing would be payslips for your PAYG, self-declaration of income, low doc or full doc. But the main two that I would like to speak about in the commercial asset space is full doc, which means providing 2 years financials, and low doc, which means no financials whatsoever. So why would you apply for a low doc? The loan amount is under 150K. Financials are not prepared. It's an ease of approval. Approximately, actually 60% of asset finance is written in the low doc space. And there's no difference in interest rates between full doc and low doc. Now, why would you go for a full doc? Well, the loan amount is over 150. Asset type requires full financials, the specific asset types that do require it. Or the client is overexposed at that lender under a low doc, and now they're required to see full documentation. And of course, better comfort from the lender seeing the full picture in approving the loan. Now, what documentation is required in a full doc? 2 years accountant prepared company financials, balance sheet, which is your assets and liabilities, commitment schedule, and in some situations, BAS statements. Now, guys, just a quick overview of how we assess a full doc deal. And this is very important and crucial to know what details a finance broker will go through to paint the full picture to the lender before submitting the deal, ensuring that you are getting approved. So we look at the company's EBITDA, so earnings before interest, tax, depreciation, and amortization. So this provides a better cash understanding of the company's earnings. So pretty much just like anything commercial, whether it's property, whether it's for assets, we do add back the depreciation interest, and that is used in servicing the loan. A few more things in how we assess full doc deals prior to submitting it. We calculate the debt servicing ratio, the liquidity ratios. We go over the financials for any key standouts that the lender may pick up on, and we ask the questions with the lender, with the client, sorry. We ask how the company is doing, who the company's major clients are, why they are purchasing and why they need it. And all this is gathered together to kind of paint a clear and solid picture to the lender when submitting the deal, giving the lender much more confidence when assessing the deal to approve the loan. Now, what if servicing is not evident on the financials? Well, there are other alternatives. Providing interims, showing how revenue has improved since the 30th of June last financial year. Providing projected cash flow statements, showing the impact of the increase in expected revenue and or the reduction in cost that the new asset will be able to provide. Obviously, purchasing that new asset could offset other expenses in the business or generate some more profit. And of course, providing extra comfort by supplying a work source contract. That's if it's applicable case by case. So guys, what we look for in financials once provided. Now, this happens at any moment. If I have a client that's approaching me for a home loan, I always look at the customer's financials, looking at better ways to kind of gather the whole picture together and look at ways where a lot of self-employed people aren't aware of how much money they are actually spending and how much money they could be saving to utilize elsewhere. So, you know, business bankers don't hang around for long. They're there for the one interaction, happy days, we made our money, see you later. Annual reviews. So we do ask our clients about their annual reviews. And normally it's listed under the non-current liabilities, your car loans, your truck loans, your yellow goods. People tend to get finance in the moment and have that finance for years and years and don't look back and think, hold on a second. I know I was in a stressed, rushed mood back then, but why is my non-current liability so high? And this is where we look for and try to identify that for you guys. So guys, assets ranging from anything that you see on the screen, whether it's your everyday consumer stuff, or whether it's even specialist, like the bottom right for a dentist. Depends on each one, but assets do range from anywhere like computers, caravans, motorbikes, to forklifts, to even lawnmowers, which you'll see a bit later that I have helped the client with. So guys, commercial loans. So commercial loans do come in a number of forms, just like personal loans, whether you're starting a new business, expanding a business, you're trying to improve inventory, cash flow, equipment and business assets, refinancing your current debt, line of credit, or increasing your work capital. Now, guys, we do have a few lenders that have actually initiated something called Kickstarter due to COVID. So we have lenders that assist with business owners that have been heavily impacted by COVID in providing them with the funds they need to start their business back up post-lockdown. Now, the beautiful thing of this is they don't look at your last few months and what you guys did while lockdown was on, as they know a lot of businesses were impacted. They look at your numbers up until July 2021 this year, and they base your servicing off that. Furthermore, they won't be taking repayments from you until November 15th, this allowing 4 weeks to get their businesses back up and running without having any burdens on the cash flow from loan repayments. Now, guys, lenders understand that all businesses don't claim all the profit in the world. They up their expenses, you know, obviously their profit's a bit lower, but they are still willing to assist with commercial funding. And banks don't understand that. Banks usually they don't look at low doc. They look at a full doc option, 2 years financials, that's all they can look at. But if financials aren't profitable, don't own property, haven't been operating for 2+ years, you know, don't worry, there are still lenders that can assist that. A number of lenders that will look at your bank statements even ahead of your financials and view your conduct. My job as a broker is to provide a 360 view on your finances. And guys, I always love to emphasize this on clients. Yes, rates when it's right is very, very serious, and that's number one priority. But it does come down to rate versus solution. How quick can the loan be done, and can it be done? You know, if your business is struggling and you're trying to chase that best interest rate in the market, but you can't get finance at all, is it about rate or is it about solution versus rate? So guys, a quick scenario about how I helped a client last year during COVID in the commercial space. I had a business that opened last year right before lockdown. Funding was declined by the bank, which caught them by surprise. This caused them to call their suppliers and advising everything to hold off. I got a call from the client and asked how much they needed exactly. So provided them with a solution for a line of credit for an amount of 20K, which allows them to draw down whenever they needed funds. So this allowed them to open their kitchen again in November 2020, advised them that if you're earning their $1,000 for the day to pay some bills or expenses, and you have that cash flow coming in the next day, you can put that money straight back into your account. The client had the funds within 90 minutes, which led them to fly across to Melbourne, complete a deal with one of their main suppliers. Now, the customers told us as an outcome that we will always be a part of their business plan and expansion, as we understand their struggles as a small business, who now have hopes to take their product interstate and potentially around the world. Quick explanation and example about data finance. Tim's Ladders drops off ladders at Bunnings, sends the invoice, 30 days to pay Tim on the invoice. Tim turns into Neville Bardos. asking for the money. Tim uses debtor finance, Tim gets paid straight away. So debtor finance is there for you to get paid on your invoices, and there are lenders that cater to that. I love to go back to the holistic one-stop shop 360-degree view about finances. Now, not only will a finance broker assist with securing that new commercial property, but will also assist you with the fit out and even funds for the equipment to operate your business. So it's not just about a one-off finance, it is a full view. Assess your situation and priorities in ensuring you are making the right financial decisions and ensuring that everyone is looked at exclusively. Now, we understand as finance brokers that each person has their own needs and requirements, making sure that you aren't making emotional decisions or in the moment decisions without understanding the impact it may have in the bigger picture, coming back to that holistic finance approach. Now, quick example about a one-stop shop. Young couple needed to purchase an investment property. They run their own business, provided a quick quote for 50K gap finance, personal loan for the purchase of their investment property for 650 grand. Now, a gap finance is a personal loan reason for a deposit to put towards a property if you don't have enough funds to pay towards a deposit. Now, the monthly proposed repayments for the personal loan was 779, just under 780. Once the quote was provided and before applying for the personal loan, I ran the servicing for the home loan, made sure that with the inclusion of that personal loan in the borrowing capacity, they still service the overall debt, placing their best interest at hand. And they wanted to know what the least they could deposit on a new investment property, obviously with a max 90% loan to value ratio, inclusive of mortgage insurance. Now, they wanted to keep cash flow in the business, hence why they wanted to get some funds to put towards a property. And happy days, we were away, both loans are all good to go. But guys, this is just an indication of some of the stuff that we go through, ensuring that we make the right decision for you. Ultimately broke down the costs that would be associated with this. After going through their financial positioning, income, assets, liabilities, we had both personal loans and home loans approved, and the clients could not believe what could be done even without the necessary funds sitting in their actual bank account. So guys, when we talk about a holistic strategy for your finance, these are just some of the major categories of financing requirements that people may need in both business and private life. And coming back to what we've been saying and what we want to get this point to you. If you're not careful and you set up something to get yourself the absolute best deal in your private life, you may be impacting on potential opportunities in your business life. Now, equally, if you set something up to obtain business finance, it may impact adversely into your personal life requirement. Now, for example, one of the people I do work with, they use their house to guarantee the overdraft in a business venture. They went into multiple other directors. Now, that's great. The company got the finance, the loan, everything was good to go, and they were able to get the overdraft facility, and away they went. But for the 5 years that he was a director for that company, he couldn't use his house easily to assist in guaranteeing his son for his property. So you need to consider, how does that work for you? Is that the right finance? And is the overall picture being looked at as a holistic finance view? So guys, what we've gone through both with Eric and myself in more detail now, there's a lot more, there's a whole lot of stuff that we're going to talk about, and you need to understand when it comes to this kind of thing. But now let's have a look at what does this actually mean and what are the deliverables of it. So what I want to do is share with you some of our success stories so that you can see if you could fit into our pictures. So here we have a bunch of clients that I've helped out just for consumers, whether it's a dealer or private sales, both being exemplified there. And then commercial client stories. So what we have here is a whole heap of clients that I have provided services to. Numbers of these clients, by the way, who have got their personal vehicles financed through me, have got their business vehicles financed through me also, be it a car, a van, equipment, lawnmower, or prime mover. And the same people can pop up looking now to buy a new house, working with them to finance their house or their children's homes. So guys, these are just some of the banks, lenders that we do work with to provide you with a very diverse panel of commercial or asset finance lenders. In addition to this, we of course have over 35 lenders for your home loan solutions. The important thing is whether you're using our services or not, you need to be thinking holistically and strategically, especially now when we're trying to recover back from COVID. You want as best as possible every bit of asset backing we've got to be able to provide you with $1.50, not just $1 worth of asset backing. So you've got to make your assets work the best you can, and you've got to make your security work for you the best you can. Remember what I said in the beginning, there's you and your family, and there's you and your business. That's holistic thinking, and that is strategic thinking. So guys, a bit of a recap of holistic strategic finance. We are able to look after business and personal needs and all of the above. Mobile lenders do make it easier for you. They come to you. It's catered service for your needs. Someone that knows you, your family, and your business. A wide range of finance providers for first, second, third tier, and exotic or non-conforming lenders. And somebody that gives you your answer for today, but is ever mindful of tomorrow. And for people, for business people, it is about the optimum for both business and personal finance needs. On that note, guys, I'd love to thank you guys for taking the time to listen to me. And yeah, really appreciate you guys. If you have any questions, we're always here for any questions you may have.
Thank you very much for that very comprehensive presentation, Rami. So Eric was talking about strategies and the thoughts about your business. Rami's talking about business and personal. And for those of you that might wonder, well, how does that really apply? One of Rami's examples was he helped a couple who had their own business reduce their total expenditure to service loans from $1,840 a month to $1,240 a month. If you're employing yourself, if you're a sole trader, if you're a tradie, if you have a small proprietary limited company, but you're paying yourself out of that company, if you can reduce the debt that you need personally by $600 a month, it means you're going to relieve the company from having to find $600 a month just to keep you going through the tough times. A lot of people don't go out of business and don't go broke because they're not getting enough money in. It's because they've got too much money going out. So if you can reduce your debt, then you're reducing the impact on the business. My role within the group is sales, marketing, and business development, along with intellectual property. I helped a company refinance 2 years ago, not because that was my job, but in refinancing the company's debts, they could actually afford to put on a sales rep. And when we put that sales rep on and implemented my sales and marketing strategy, we increased turnover by 25% in 1 year. So the ability to have somebody like Rami that can manipulate all your loans and get all of that servicing allows somebody like Eric to come up with a strategy for you. It allows your accountant, if you're working with Ronell, to be able to put all of that together. And then me, the sales and marketing guy, can suddenly get a sales rep in there, okay? So at this point, Eric, I'd like to pass back to you for you to look after the Q&A side of things and carry on from here. Thank you, both Eric and Rami.
Thank you, George. Thank you, Rami, for the presentation as well. I just want to welcome back our panelists. We have Ronell Wilson, partner at CIP Accountant and Advisors. We have Milin Kulkarni, digital transformation leader at Smart Information System. And we have Jason Chung, practice manager, license conveyance at MLC Lawyers. And of course, we have George and Rami and myself in the panel as well. I actually got a few questions coming through here. If any of you want to have a digital question under the panel, the Q&A, just type it in and we will address that. Okay, so we have several questions here. Let me check it out. Okay, this is most probably quite relevant under current circumstances. It says, what do you need to maximize your loan borrowing affordability and how to meet the lender's criteria? I think Rami already answered some of those, but maybe Ronell, you can share your view as an accountant.
Yeah, sure. I think it's a good idea to have your documentation and your financial position as best as possible before you apply for your loan. So number one, get your tax returns up to date because the ATO will want to see that. Make sure your financials and tax returns are lodged. Prepare a budget, perhaps, for your living expenses and have that ready to go. Maybe if you can consolidate your debt before you apply for the loan, which will show you've got a greater serviceability requirement, cancel any unused credit cards, consolidate debt where you can. And also investigate having multiple lenders, because some lenders will have a certain exposure to some industries or locations when you're getting debt. So if you have multiple lenders, then you're not assessed in the same way as if you had, say, all of your loans with one financial lender. So that can make a big difference as to your ability to get new loans if you've got existing debt as well. The other thing I can think of is probably have a split loan. If you've got a home loan and investment property, split those loans so you maximise your tax deductions with negative gearing on the investment property. You'll have more cash in your pocket for the affordability, and so that's a good way to make sure that you can get that investment property and you've got that serviceability there.
Very good, Ronelle. Much appreciated. Any of the panel would like to share their thought as well in this regard? George.
Yeah, I think what Ronelle was just saying then just further enforces what I was saying earlier on. Ronelle is your accountant and Rami as your finance provider. If you've got those two working together as a team, you're going to set the thing up that gives you an optimum for both business and personal, and even within personal for your primary home and your investment property. So there really is not one size fits all, and the more you have a team working for you, the better the coverage. That's why we have 11 players on a soccer field, isn't it, Ram?
Excellent. Yes, thanks for sharing that. Another question here, it says, what should we focus on with home loan contract? So it sounds like, the person most probably in the process of either buying a house or thinking about it. Maybe Jason, you can answer this because you do a lot of conveyancing work. Are you there?
Yeah, definitely. With a home loan contract, it's always important to have a good read and understand the contents of what you are entering into. Often someone like Rami, who's your broker, will be able to guide you and help you hone in on the important aspects of the contract to do with what you're going to be dealing with in the future. So the most common things that clients will come to me about will be, what's my interest rate? What are the fees and charges I'm looking at? What happens if things don't go the way that I expect them to do? And all of those type of challenges that might be at the top of their mind. I often refer them back to their broker or lender to get a good insight of what those answers might be. They are all in black and white in the home loan contract. They are understandable, readable English, and the bank or broker that you're dealing with should be able to provide you with the answers that you need or the questions that you have. They'll have all of those answers ready and waiting to go for you so that you know what position you're going to be in. So having someone that has a holistic approach to these types of matters and an understanding of how the different types of finance works, like Rami, will really be able to have a sounding board for your questions. So I'm pretty sure if there is a question about a loan or how the documents are drafted up, Rami would have come across most of them before. So he can probably assist you in getting a good answer and feeling a bit more comfortable with what you're entering into.
Very good. Any other panelists would like to share their comment?
No, Eric, spot on. This should all be explained with the customer when executing the documents. Lenders and customers even have the option, if it is a Big Four bank, to even go into a branch and execute those loan documents in a branch with a witness that works as a branch manager to go over the documents, make sure you have any questions. And that is, of course, if they want extra other than the broker. Well, the broker's there, obviously, to answer all questions they may have. But those services are there also to go through any contracts. But Jason hit it on the head, spot on. Those questions are always available for you to ask, and your broker should be able to explain that to you, of course.
Right. That is good. The only thing I want to add is, quite often a lot of us, when we enter into contract, obviously, we get all the different help. One of the reasons we go to a solicitor or conveyancing like Jason is basically clarifying, our obligations, and I think those, sort of what we call fine prints, make sure there's nothing in there that's quite surprising that, we do not know or don't understand. It's about risk management that we ask our, the solicitor conveyancer. And that's why I think, it's very important to get a whole team working together. Quite often some of the issues that we have had when we refer is that, the conveyancer or the solicitor actually not taking time to actually go through the contract properly and explaining, some of the possible negative implication if they don't understand right now. Otherwise, we'll catch them by surprise. So I think it's quite interesting thing that we are going through as well. Yeah, thank you, Jason and Rami. I have another question here. Okay, this is basically most probably an open question. Now, it's talking about from business perspective, right? When they want to get additional finance, why most of them are very frustrated and uncertain, and I guess quite reluctant to see their bankers. Any of you want to jump in there? Because what basically I think Jed here said there's personal experience is, when to borrow money, just like, going to be interrogated by, the Russian agent or something. So who would like to make comment there? George?
One of the things that's come up for me just recently is I've assisted a couple of people in buying vehicles, one a new car and another one was a second-hand vehicle. The number of people that just sign contracts or agreements that are put to them by the car yards, and just on the basis of, well, it's normal, everybody signs it, or it's the standard. There are many things that are written in that fine print that you can negotiate out. And it's important for you to talk to people, be it your business advisor, your accountant, your loan provider, the person that's running as far as your solicitor work in the contracts and all of that. Because not every contract is set in concrete, and many of those things you can negotiate around or you can change. The other thing is that the thing that I want to remind people of, because I had a situation with a lady that contacted me last week on a problem. She was looking to get a loan and she had approached 6 or 7 organisations to find out what the deal was, but she actually applied for the loan for all of them. As you would know, Rami, by the time she got to the 7th one, she had a record of having applied for 6 loans, right? So folks, when you are going for a loan or when you're trying to find out, make sure you ask for them to not put in an official application just to give you an indication, because each time you put in an application, it goes against you. So this lady supposedly had 6 loans on the go. In actual fact, all she was doing was shopping around, okay? So don't be afraid of them. Make sure you've got a team behind you. And if you've got a good team behind you, you don't have to worry about whoever's in front of you.
Very good. That's actually quite pertinent. Another question here. With the reopening, this is the first time we are considering a CRM system, and we are still in the process of exploring that. We just wonder how can CRM not only help us with the marketing and leads automation and process, also in terms of cash flow. So most probably, Millie, you'll be in the best position to answer that.
Yeah, sure. That's a good question, actually, because during this time, and Eric, you have covered this part of it in your presentation a little bit about how the customer behavior is changing. And one of the things which we have seen into the IT area, in the software area, is a lot of things have been changed, a lot of pickup have happened. For example, take the signature, online signature, the digital signature. That business has grown more than 100% in last 2 years. So if you look into the CRM part, and what we have seen is in the normal businesses, 30% more leads can convert it. And if you can convert more leads into the customer, always it is going to be good from the cash flow point of view. Now, but before you can do that, now, whenever we are talking about getting leads to the customers and all those type of thing, George is the person who knows how to convert those leads. So what we do is we provide the system in place, and those systems, once you start looking into it, and other part which we are helping a lot nowadays is connecting the system together. So as soon as you have provided the services, an invoice can go out, because many times if it is a small business, 1 or 2 people companies, the people provide the services, but invoice do not go out for 2 or 3 months. And that time actually they are losing on all the cash flow which is coming in. But before, what we always suggest is, and again, as this group is more about the strategy part of it, that before putting a system together, you might want to give a look into it. How is your sales process going, which can help you to on the cash flow? George, would you like to suggest something on that? What are your views on it?
Well, again, I've worked with companies that want to increase business. We actually had a company that we added 2 salespeople in, and we were looking at additional $2.4 million, $2.4 million in sales in the first year by adding in the 2 people. The only problem was that they needed around about $1.3 million cash flow to finance the growth in the business, because they had to build, they were building $100,000 units, and they had to build them and carry that carry that build cost. Through working back with the accountants people, they're then able to work out what's happening as far as the financing of the sales that you're making. Through working with your CRM, you're starting to get an idea of, do I need the money today? Do I need it next month, or do I need it next week? It's very critical in business that you have everybody talking to everybody. Now, I often joke about and relate things back to the soccer team, mainly because I've played soccer since I was 9. One of the things that you learn from any team sport, you have a specialist that's up the front in soccer, called your strikers, and you have a specialist up the back in soccer. That's called the goalkeeper. So one's stopping them, one's saving them. But without all those people in the middle, you're not covering the path. And that's what a business team's about. That's what this team focuses on. It focuses on strategy. So we don't just cover scoring, and we don't just cover defending, we cover the park for you. And if you haven't got a team like that, maybe you should be talking to one of us.
Yes, very good. Now, this question here, once again, maybe the few of the panelists can respond to it, is more about, when you purchase a property, there are so many moving parts that you need to consider, whether looking for property, which involve real estate agent or maybe the buyer's agent, or whether you need the actual loan, which involve either banker or I guess one-stop shop broker like yourself, Rami. At the end, obviously, you might need some advice from the accountant in terms of the structure, whether by under trust, under personal and all that. And at the end, the end part is the solicitor and conveyance, like Jason, which basically need to finalize the deal legally and giving advice with all the pertinent areas. I guess the question is that with all this moving part, what is the suggestion for people who want to invest rather than buying their own property? Anybody want to jump in? Rami?
Yeah, I'll go in. So regarding the part where you spoke about, do we purchase in a trust and do we purchase it in our own name? That first and foremost, go speak to Renell, get that sorted, speak to your accountant, get that part sorted before you even think about talking to a broker. So I think once you've kind of set the foundation of how you want to approach it, you've talked about strategy with your accountant, and you have an idea of what you want, that's when it's time to kind of speak to your broker. I always tell people, don't start looking into the market, investment owner occupied, until you have been pre-approved. Now, the reason is a lot of people get very emotionally attached on a property and get their hopes up that I'm going to buy that $1 million house. I'm going to get that $1 million house. And they get so caught up on it. You know, I've seen this so many times where actually just 2 weeks ago, I had a husband and wife. The wife was so attached to the property and the husband was like, look, we've got to get this property. We've got to get the property. Ran a borrowing capacity. They couldn't service the $1 million property. And you know, thank God for them. They didn't go and put a deposit down and get carried away and commit themselves. But for me, it's like, for example, if you go to an auction, you don't want to go with a blindfold on. You want to go with a blank check that says, yep, I can buy a property for $1 million in my hand right now. And at any moment, I can bid for the property, win the auction, beautiful. I give the contract of sale to my broker. He orders the valuation, does the background checks, happy days. Go to my solicitor, Jason, go through the contract of sale. Is there anything in any specifics that I need to be aware of? Anything that I need to know about? He will then communicate with the vendor solicitor. So there is so many factors that are involved with a team. Like George keeps going back to the team that you need, But for me, from a broking point of view, number one, biggest mistake you can make is starting to look for property before being pre-approved. And really quickly before I send it back to you, pre-approvals last 3 months. And that can be extended for a further 3 months with updated pay slips and whatnot. So you're not in a rush to jump into the property market. You have a pre-approval that sits there for half of the year that you can actively go out and look into the market for a property.
Anybody else want to jump in?
Sure, I'll jump in. I think, as you all may know, the property market is quite hot at the moment. And I think what Rami mentioned is really important. Step one, figure out the entity you wish to purchase the property in. Speak to someone like Renell, get in touch with your accountant, find out what's going to benefit you tax-wise, and then structure your deals around that. Figure out whether the entity can borrow. You can't go out and open a company tomorrow and borrow the next day. So these things take planning, and proper planning provides proper results. The other thing I find is with the market moving at the pace that it is, proper legal advice and legal planning is important. I often get people coming across my desk sometimes on a Monday morning saying, Jason, I just went to some open houses on the weekend. I want to buy this one. This is the one. I've got it. And often I will ask the questions that Rami raised at the start of what he said is, you know, do you know who's going to buy the property? Do you have a pre-approval? Let us have a look at the contract to make sure that we are buying what we want to buy and the terms are what you're able to accept. With a lot less properties on the market in the last 4 months than usual, the demand is high and auctions are very common. The last thing that I would want is for someone to come across my desk on a Monday morning that's just won an auction, that doesn't have a pre-approval and hasn't gone through the contract, which happens. You know, these things do happen. So you're leveraging on the network that you have will be able to provide you with the best results you can possibly get, and leveraging on the knowledge of the individuals that you have at hand can really give you a really good result. Obviously, I can help people, and Rami can help people, and Renell can help people if they're in a bit of a pickle, if they may not have done that in advance. But if you can get the right advice prior to getting into the market and looking for the property and finding the one you want, that will really provide less stress for you, less stress for the individuals involved that are helping you. And then, you know, it will give you a really more smooth approach to acquiring that investment property or property you want to live in. Because emotions run high, like Rami said. I completely understand. You're buying a property, you want to get in there, you've seen it, it's great. The wife loves it, your husband loves it, you want to get in there, but we need to make sure that you get in there and you get in there with as little stress as possible so that it's a happy, enjoyable experience. So that's probably what I would say in regards to property purchases.
Very good.
Yeah, I'll just jump in with a few things.
Good.
There's so many different factors you need to consider in terms of structuring. Can't even go into them all here, but you've got to weigh up sort of your tax position, your asset protection position. Where is the money for the deposit coming from? If you have all your wealth in your company and you want to buy an asset personally, you may have to pay tax on the way on a dividend you take from your company to pay the deposit. If you put, say, a residential property in a trading company, you've got an enormous amount of issues in terms you might be up for fringe benefits tax. So you've really got to talk to your accountant. And there's a different outcome if you buy for land tax, if you buy in a company versus a discretionary trust. So there's a multitude of things that you need to consider. And sometimes the tax and the asset protection objectives are not on the same page, they're in conflict as to which one's more important for you. So there's a lot that comes into it. So yes, get some legal and accounting advice beforehand.
Very good. Yeah, it's not as simple as you think.
Can I just jump in there for a second? What Ronelle has just said should have come straight in to one of those slides where Rami talked about, we don't make a decision for you today without thinking about the decisions later on down the track. Because what Ronelle's just pointed out is a classic example of what that statement's really all about. Because somebody goes, oh, wow, I can do it through the company. You beauty, I've got it all set up. And then 6 months later or 12 months later goes, oh, now I can't get the damn thing out of the company. So that's a very, very good example of Ronelle thinking about, hang on, yes, you could do that today. That's the short answer. The longer answer is it could get ugly tomorrow. So yeah, great point, Ronelle. Fantastic. Thank you.
Spot on.
Absolutely. So, I mean, if you ever look at that, especially with the last question, the interesting thing is if you want to get things done properly, you actually need different expertise to get it done. So I think one of the advantage for, having a really good network like, in this webinar, you have the right people to talk to. Very importantly, all of us understand the complexity of actually get each component done properly. Because if whoever you're dealing with not thinking holistically, the issue is they only have to look from one perspective and you might miss out in other areas, some of the pertinent and important risk management in the future. It might create, a lot of challenges that, you don't know because you don't know. So that's quite interesting thing. I think we got 2 minutes and then I think I got a few more questions. Unfortunately, I cannot answer all of them. So I will actually try to get the panelists to respond to some of them that come through our Q&A. And most probably, I just addressed this last question because actually specifically addressed to me as a presenter. So Eric, it's great that you mentioned one of the critical factor for business value is actually lack of business strategy. But for every small business owner like myself, I don't actually understand the nitty-gritty of setting up a strategy because I'm always very busy in growing the business and running the business and keep going. Can you maybe just clarify if we want to go about it, how would it work? That is certainly an interesting question. I think SME, they are not familiar with the best practice in terms of, strategizing to make sure their business can grow, can be sustainable, and even come up with the right exit strategy. So if you go to a big company, it might take you a while to come up with a whole strategy. They have a whole team and then produce, a few folder of documents. But when we work with small, medium-sized businesses, we actually aware they are time poor and resource poor. So we actually created our own methodology, basically through 3 half-day period of what we call strategy formulation or review, we go through the industry analysis, including the trend. We actually have a look some of the opportunities out there and have a look at your strength rather than your weaknesses. How can you be competitive in the area they have a lot of opportunities and you have some strength in there, and come up with a business model considering your target customer. How are you going to market and reach them? What is your sales process that you will actually convert them into customer? And considering obviously the fulfillment, in terms of the way you are going to satisfy them with your product or services and customer service. And very importantly, the dollar and cent. We actually come up with what we call financial roadmap. We come up with certain assumption to analyze the revenue, the direct cost, the fixed cost, profit, and cash flow. Make sure that we actually can manage it to make it successful for business owners. Now, through our experience, when we do that, normally it takes 6 or 7 different versions to come up with the one that in terms of profit and cash flow will work. So we actually can pick all the key drivers to make it work. That is how important this. I understand some quite complex, but when you have a specialist like us work with you, actually not as complex as you think. But obviously you got to invest a bit of time, and a bit of money. But we are not talking about spending weeks and months, get it done. It's more like 3 half day. So I hope that will answer your question there. Basically, I think we are running out of time. So I would like to thank all the attendees, and any further inquiry, please just contact us at info@bgs.co or any of the panelists that you know. We are quite happy to connect you with them, and they'll be quite happy to discuss any of your question or requirement offline. So thank you all. I just pass it back to George to close it.
Okay, so I hope today has given people some food for thought. As I say, most of our presentations, we would all love to do business with you, but what we're really, really interested in is you doing good business for you. So if it's not us, just make sure you've got a professional, because if you think professionals cost you money, you haven't seen nothing until you use an amateur. Okay. Good luck to everybody. Make sure you've got your strategy, make sure you've got your team, and let's go and kick some goals. Thank you.
Thank you all. Have a nice day.
Thank you.
Bye.
See you later, guys.
Okay, bye.